Bros. Okay.
Hello, ladies and gentlemen. How are you? Welcome to GI Factor and the Demystifying Government Contracting Community celebration of National Small Business Week. We have had some unbelievable technical difficulties, so please forgive us if we missed you. But the beauty of this is you'll be able to go back and view it later because there's some amazing information that we'll be sharing tonight. And guess what? I am honored to be with Iman Cotton from CDC Small Business Finance. But more than that, before we get started, you might say, why are we doing this? The theme for National Small Business Week, which started in 1963, is all about empowering small businesses because even though we think that the US government, who is the largest buyer of goods and services, is the bomb.com, the thing that makes everything go around. But guess what? Do you know that that amount of buying power does not outdo small business? Small businesses are the ones that keep the engine of this nation going. And we are on a mission to empower, educate, and inspire you today. And today we're talking about finances. So before we get started, we're going to be live all week. Did I say we're going to be live all week? Technical difficulties or not, we are pressing ahead. We are going to do this because the response has just been absolutely tremendous. People who have gone back and watched this absolutely love it. So with that being said, it is my absolute pleasure to introduce you to a maven, a vixen, a
Oh,
fighter for the community of small businesses who are seeking access to capital. She is located in the Los Angeles area, but she can serve any and everybody. She is dropping some tips, gold nuggets for you small businesses who may say, well, I'm not sure I can get approved. Well, Iman Cotton is here today to tell you not only what you can do to be approved, but if you so desire, later you may need to get ready, get some things in place, all of that. No worries. She's going to educate you on how to position yourself for success to be ready for access to capital. So Iman, before we get started with your presentation, how you doing?
Michelle, thank you so much for having me. Thank you for having me and for the platform. You're just an amazing woman,
Oh, thank
amazing,
you.
fearless woman, especially amazing, fearless Black woman on top of that.
Oh,
So
wow, wow, wow.
you
Thanks.
are sincerely appreciated for everything that you're doing to the community and for the access that you just allow all of us to have on your platform. But I'm doing fantastic.
Good. Well, tell us, you have had an amazing career. You've been in corporate, you've been doing small business. What made you decide to come to the loan officer financial, small business financial arena? Tell us a little bit about something that happened in your past that made you passionate about what you're doing today.
As you mentioned, Michelle, I am a maven. I look at myself as a maven. I want to be that go to person for every and anything it may be. I want you to come to me for advice, for recommendations, for support, whatever it may be. So, being in banking, from being a teller to a business banker to a senior banker to a vice president relationship manager, and even
Wow.
branch manager, and even branch manager. Um, I'm so grateful to be with CDC Small Business Finance because of my ability to impact change and to actually help people, help business owners, and then on top of that, to help business owners that actually look like me.
Yeah,
So,
wow.
CDC has been uberly fulfilling for me and rewarding on a personal level just because I actually feel like I can help impact change.
So tell me, why, people just think of, banking and loan folks as somebody you go to when you need something. Why is it important? Because that tremendous background you just laid out make you the perfect business advisor. So, what would you tell small businesses about building a relationship with folks in the financial arena, not just as somebody to come to when with their hand out, help me, get money? What would you tell them? What else should they engage you on that you might be able to help them with?
You're asking about relationships, and I pride myself on developing and cultivating relationships. And not to take up too much time or go back too far with my background, but I graduated from DePaul University with a degree in finance. And I just knew or thought I wanted to be a financial advisor. I just knew it. I just knew it hands down. So I thought I wanted to do the insurance, investment, retirement plan, and things of that nature. So I actually did. I started with Mass Mutual. Mass Mutual is an insurance company who provides, retirement planning, annuities, investments also. I was only life and health licensed initially and studying for my investment license, or the Series 6 and 63. And I am so grateful for Mass Mutual being my first place of employment, because they actually taught me the sales cycle and how to develop and cultivate relationships and the importance of professional relationships and connections. So from a very early stage after graduating college, I knew relationships were important and relationship would be the key to my ultimate success.
So you got a gold mine. You got a gold mine.
Thank you. But relationships, why is it so important? You want to start with the financial institution that you're working with, because they can ultimately, you want to find a quarterback. You want to find a quarterback if they're at your bank, your financial advisor, whoever it may be. But hopefully we can find this person at the bank. Banking has changed. It's so different. You are lucky and blessed to have a banker that is caring and concerned and provides outside recommendations outside of those four walls. Although I love banking, I didn't get in trouble often, but I had, conflicts, because you come to me at Bank of America and I'm like, I really need you to go across the street to Chase, because they have a better program for you, or they can meet you where you're at. So you just really want to find an honest person within banking who's knowledgeable. And even if they don't have all the answers, I don't need anyone to have all the answers, and I don't have all the answers, but I need you to be resourceful enough to go figure it out. So you want to deal with your banking relationship first, where you're working. Where you're banking at for, credit cards, secure credit cards, loans, or, secured loans such as CD loans, things of that nature, and to just get their advice and recommendation of how you can improve your overall financial profile and become bank ready, which all of these things tie together all week long. So relationships are invaluable in financial institutions, period, because you want to make sure that you trust the person, that they're knowledgeable, and that they can be resourceful enough to go find the answers, and that they're honest.
Yes. And I love what you said. So if there's a CEO out there who is saying, how do I start that relationship? How do I know that person when I meet them? Because sometimes, the banks that I've heard this from small businesses, that they have their money and don't treat them well. So if let's just say they're searching, for lack of better words, for that next move, right? The place where they can move their money and find somebody who is believing in them, investing in them. What does that look like? Give them some actionable tips that they could take. Okay, I have a clear vision or approach on what I'm looking for. Because you know what it's like. If you're looking for a good thing, but if you don't know what a good thing looks like, then anything is good. So please.
For starters, I would say research. It might not be your current financial institution. And like you said, you could possibly have, let's just say you have 50,000 on deposit at the bank and you feel like you aren't getting the treatment that you deserve ultimately. I would say off top, research. Research is key to ensure, and I'll talk about this also, that the appetite of the financial institution that you're working with can meet you where you're at. So you want to make sure that the financial institution, again, that you're working with can service you at whatever level of business that you're at. If you're only a startup business, what can you do for me as a startup business? So just as you're hoping that the bank accepts your business, I would say take a different approach, and they need to earn your business.
Oh, that's good.
Take a different approach, and you need to interview. Just like you're going on a job interview or you're interviewing for employees, you need to interview the professionals that you're working with moving forward, just as
Yes.
you interview, for different opportunities. You're worthy. You're worthy. You have to believe that and know it to the depths of your soul, to know that you deserve respect, you deserve answers, you deserve follow up, you deserve basic treatment that an
Yes.
employee of the bank should be able to provide you. Before we even talk about going over and beyond, I just want
Yes.
the basic services for you to do your job. You know, let's just start there. Let's start there before I ask you for too much or over and beyond. But for me, it was an honor to be a banker or to be in banking because I'm the plug.
Mhm.
You know what I'm
Mhm.
saying? You're coming
Yes.
to sharing with me
Yes.
all of this information and you're trusting me to share with me
Yes.
all this information.
Yes.
And if you're
Trust.
not sharing all of this information or all of your personal and financial information with your banker, you may want to consider changing your banker if you don't feel
Mhm.
comfortable to go in there and say, oh, I'm about to lose my home. I'm about to do this.
Mm.
This is happening.
Mm.
This is happening. So they can provide resources. And you had
Yes.
Linda Gray yesterday. Amazing. Amazing the resources that information she provided on like nonprofits, not just nonprofit, but like resources in life.
Yeah. Yeah.
That
Absolutely.
that's within her wheelhouse. So as a banker, and shame on me because when I was in banking for over 10 years, I knew nothing of CDCs and CDIs,
Wow.
what Miss Linda talked about yesterday and what I'll talk about yesterday. So if you came in as a startup, it's like, I'm listening, I'm listening, I'm listening. And it's like, well, sorry, we don't help with startups after you give
Right.
me your whole 30-minute spiel and all the time, all the while I'm not listening because I can't help you. But guess what? Wouldn't it have been invaluable for me to say, I can't help you? But guess what?
But exactly.
But call Iman at CDC Small Business Finance because she can help customers with 0 days in business, that this, that, and the other, and more. So
Yes.
you need to find a person that's respectful, that's kindred spirit. Not to go there, but the spirit of discernment is real
Yeah.
also. If
Yeah.
you're feeling like they're disrespectful and dismissive,
Condescending. Uh-huh.
condescending,
Mhm.
not supportive, not giving you advice versus being condescending and making you feel belittled, you need
Mm.
to find a new banking relationship.
Wow.
And
That's
again,
so
you're
good.
worthy. You're worthy enough, and they need to earn your business,
And
period.
there's opportunities out there for you to find that right person who can
Absolutely.
really leverage all these tools and things that you're going to share um, with you and to enable empower your business for not only success but financial success.
Absolutely. Even just not even with that, but to set you up to for success for personal, for professionally, for if you want to be a business owner, your
Mhm.
banker should almost be one of your best friends.
Wow, wow. Well, with that, let's go ahead and hey, that's mic drop right there. So so we looking for BFF, best friends, best
Absolutely.
financial friends. That's a new
Absolutely.
term. We're
Yeah,
looking for BFFs.
because as a banker coming out of college, your banker, they can help you know which accounts you need to open, which credit cards you should apply for. Once you become a professional, they can refer you to the investment advisor for investments, for retirement planning. Once you have children, they can help you with, savings for your children. They can help you buy a home, you and your spouse, once you get married, or if you want to, buy a house already. So your banker, once you find a banker who loves what they do, you'll love them.
That is perfect. Well, I'm just gonna say, Iman, you are my BFF, my best financial friend, sister. I have enjoyed getting to know you. I'm enjoying getting to know you. That's a continuation, because ladies and gentlemen, I can tell you that this lady absolutely is passionate and authentic, and she is a wealth of information. So with that, I'm going to leave it to you to share all of the opportunities for you to assist their small business success.
You got it. Thank you so much again, Michelle. And
thank you.
I know some of this information might seem like basic level information, so I won't spend too much time on it, but I want to make sure that I review what sets CDC apart from other institutions, and just information so you can be prepared to go talk to any lender and have a knowledgeable or intelligent conversation. So there we go. I'll do the quick introduction. I'll review what is the CDC and CDFI. And again, if you were on the call yesterday with Miss Linda, she discussed CDCs and CDFIs, how they can help you with sponsorship if you're a nonprofit, and what their mission is in the community and things of that nature. I'll go over the 5 C's of credit, but I won't spend too much time on that. I'll let you know what's most important for lending at my organization that I work for. I'll review a few of the different types of loans, and then share a success story or two, depending on how fast I'm moving. With that being said, guys, what is a CDC? A CDC is a certified development company. CDCs are certified by the SBA, the Small Business Administration, to administer 504 loans. These CDCs can be private, nonprofit entities with a mission to provide business financing to those who aren't quite strong enough for bank financing. There are over 260 CDCs in the country. A CDFI, a community development financial institution. CDFIs help promote access to capital and local economic growth in urban and rural low-income communities across the nation through monetary awards and the allocations of tax credit. Financial institutions certified by the CDFI fund are eligible to apply for monetary support and training to build organization capacity. These institutions have community development missions and a reputation for lending responsibly in low-income communities. A CDFI can include banks, bank holding companies, credit union, loan funds, and venture capital companies. And there are more than 1,300 CDFIs in the nation. As I was talking about the banks, not all banks are the same. Not all SBA lenders are the same either. The SBA has a SOP, or a standard operating procedure, where they provide rules and processes and guidelines that an SBA lender may, must, or should follow. The credit box, or internal credit policy, determines the lender appetite to risk. Such things such as the minimum FICO score, collateral requirements, length of time of business, all of that is set and determined by each different lender. So keep that in mind. The FICO score, I'll just review what makes up the overall credit score. Is payment history, capacity, length of credit, inquiries, and the type or the blend of credit. So if you have installment, revolving, mortgage accounts, things of that nature, the blend of credit is reviewed also. I'll review like what impacts your credit score. Actually, I'm going to save credit for Daniel, my colleague or partner, to touch on. He's going to review credit, so I'll let him review what goes into the credit score and things of that nature. I will mention on this slide, though, CDC Small Business Finance, guys, we have no minimum credit score requirement. Mic drop, mic drop, mic drop, mic drop. CDC Small Business Finance has no minimum credit score requirement with reasonable explanation. Keep that in mind. The 5 C's of credit, guys. So when I was in banking, for instance, character, or the one that's like credit behaviors based on indicators like your credit report and score and payment history, used to be the most important C when I was at a traditional financial institution, or for most traditional financial institutions. When I say that, I mean like Bank of America, Chase, Citibank, BMO, places of that nature, traditional financial institution, or even your credit union. Most importantly for them is usually credit. If you don't have this certain amount of credit score, then we can't proceed. Now, for me, with CDC Small Business Finance and the nonprofit organization that I work for, the biggest thing for us to start with, we have to meet the condition. What that means is you need to have industry experience in any business that you're looking to do. It's sometimes 2, but it's most times it's 2 years of industry experience, but sometimes we need 3 years if it's a high risk industry. If you don't have the industry experience, or you aren't bringing someone into the business that has industry experience, or you can't articulate from your professional experience how you have the industry experience, then we cannot even proceed with the application. After the industry experience, the biggest thing is capacity. Your ability to pay back your debts. Capacity, capacity, capacity. Cash flow is king, guys. So for instance, as a startup business and CDC Small Business Finance, 67% of our loans have been given to startup businesses, 0 days in business, projection based. When I say startup business, I mean true startup business. So 0 days in business, projection based. CDC Small Business Finance, we do projection based deals, and we work with existing businesses also. But truly, it is simply all about your ability to repay the loan back and your personal expenses with us. So capacity. As a startup business, all you simply have to do is be able to show us that you can cover your personal living expenses and the minimum payments reporting on your credit report, and we'll give you the business loan up to $350,000 simply based on your projections. Again, any business that's considered a startup, or 2 years or less completed financials, or even if you do have greater than 2 years of financials, I might still be able to consider you a startup. If you started during the pandemic, you still took some time to get going, you took a break for a year, you don't have positive net income, things of that nature, I can still possibly count you as a startup, even if you've been in business longer than 2 years. For an existing business, the cash flow or your capacity has to be able to cover your current business expenses, your current business debt, plus the new loan request. Now, and I'll get into what makes us different than your traditional financial institution as far as cash flow. Collateral, yep, this is for real. It's, yes, ma'am, it is, Ileana. This is real. So capacity for an existing business, again, all you have to be able to do is show that you can cover your current business expenses, the current business debts, and the new business loan requests. If it's a startup business, projection based, 0 days in business, I can give you $350 based on projections. And then collateral, we don't require any personal collateral if we can make the decision in-house. But collateral are the assets that you have to put up for the loan or the pledge to back the loan. And then there's capital. We always want to see, or any lender wants to see, that you can have skin in the game, or how much have you invested in your business already. And you can't really expect any lender to invest in you before you invest in yourself. So we want to see that you have your own money to invest in the business. Also, this is not money that we're taking away from you. This is money that you're depositing into your account. Also, we can count previous capital injections. So for instance, if you've taken a loss on your business tax returns, and you're still getting started, I can use that loss towards your 10% injection, or your 5% injection if you're considered BIPOC. I'm not making, you're going to burn it all the way before I finish, Ileana. Again, I'm not going to stay on, I just reviewed each one of these 5 C's on the previous slide. So I'm not going to stay on each one of these. But again, conditions for us, we need to see into 2 years of an industry experience at least. But conditions also, does your lease location matter? Does the term of the lease match the term of the loan? Or do you at least have renewal options for the lease to match the term of the loan? Just different things of that nature. How many business owners are a part of the business? Capacity, again, as I mentioned, cash flow is king. And for a startup, you only have to show us the ability to cover your personal living expenses, the minimum payments reporting on your credit report, and we'll give you the business loan up to $350 based on your projections. Existing business, we look at the business income and your personal income, but that income has to be able to cover the current business expenses, the minimum business debt payments, and the new loan request. Capital, that's, as I just mentioned, this is what money do you have that can be invested currently, or have you invested thus far? So CDC Small Business Finance, we require, again, a 10% injection or investment. If you're considered BIPOC, if you're a Black, Indigenous person of color, that 10% goes down to 5%. So if you want to request 100,000, naturally, I would need to see 10,000 if you're non-BIPOC. But if you're BIPOC, I only need to see that you've invested already 5,000, or that you can invest 5,000. And I simply mean just depositing that into your business checking account before the loan is funded. Character, anyone with 20% ownership or greater has to go on the application. Rule of thumb with spouses, guys. If your spouse income is required to support your household, your spouse income will be required to go on the business application. So keep that in mind as far as spouses and things of that nature. If their income is required to assist the household, it'll be required to assist with the application. Collateral, again, we require no personal collateral as long as I can approve the loan in-house. If the loan has to go non-delegated, or if the SBA has to make the decision, then they may require collateral, but we do not require any personal collateral in-house. Your home can be your home is can be considered as a collateral. Business assets are collateral. Personal assets that can be considered like your personal vehicle, cash, things of that nature. Those are collateral items that can be used to put up or to back the actual loan. Although we have no minimum credit score requirement with reasonable explanation, I do have a minimum SBSS score requirement. And the SBSS score is an indicator of how likely someone is to pay back the business loan. And it's a blend of your personal credit and your business credit. And like I said, it's just an indicator of how likely you are to pay back the loan. Anybody with 20% ownership or greater has to go on the application, and will impact the overall SBSS score. Now, I know you say, what if I'm a new business and I don't have a business credit score? But things such as your time in business, the industry of the business, like if it's a higher risk versus lower risk, things of that nature, all of that impacts the overall SBS score or your business credit score. Absolutely. No minimum credit score, no minimum revenues for CDC. It's all about capacity and you being able to cover your current living expenses and minimum payments reporting on your credit report, and we'll do the business loan for you based on the projections. Use of funds matters significantly. And for misappropriations of funds, you can be penalized to never be able to borrow any federal funds again. So make sure what you get the money for is what you use it for. With the SBA microloan and community advantage loan, you can use those funds for business acquisition or change in ownership, equipment, refinancing debt, working capital, startup costs, or even tenant improvement. The SBA Standard of Operating Procedures, or SOP, and the lender credit policy box or credit box will determine the rules and willingness to lend for a specific use of loan proceeds. So again, if it isn't for one of these reasons, we can't lend to you. We just won't give you money because you want it. You actually have to show us a need for it, and then we'll lend based on the actual need. We do loans. The reason why you will come to me versus your bank is if you're a startup business, early stage business, weak cash flow, weak collateral, or even credit issues. I can work with someone that has open collection items or open judgments, but there needs to be some type of resolution in place. So whether that's you going to put a documented payment arrangement in place with the collection agency for $10 a month that they'll accept it. I just need some type of resolution in place. If your identity was stolen, I need the credit report and I need to understand what happened, to cause any type of credit challenges or issues. Tell me something versus just you were just negligent. And I'll try to paint the picture so we can overcome the obstacle. I offer microloans. The microloan actually ranges for, and this is only specifically for the state of California, I could do the microloan in. The rate is actually now 9.5%, but there are other CDCs and CDFIs and lenders in the state that you're in that actually offers microloans. And again, microloans are typically 50,000 or less. The term for us is up to 6 years, and the rate is currently at 9.5% fixed. The Community Advantage Program is what I can help with in all states besides 6. So please, please, please call me, reach out to me, set an appointment with me. If nothing else, so I can just help give you a checkup or a physical on where you're at financially, and whether you're a startup business or an existing business. And I can work with anybody besides if you're in North Dakota, South Dakota, Tennessee. Utah is limited, Vermont, and Alaska. The Community Advantage Program allows lenders to make SBA 7A loans. This is offered directly by CDC Small Business Finance and other approved alternative lenders. The SBA guarantees 85% of the loan, and the lender or the company does the other 15%. But the Community Advantage Program can be requested for startup, existing businesses, expansions, acquisitions, debt refinance, and you can even purchase commercial real estate through the Community Advantage Program. And for commercial real estate, I can do 100% financing for the community through the Community Advantage Program. Now, this for commercial real estate in California, it hasn't been that successful. I'm working on two deals currently. One in Lancaster, California. The guy is looking for a lot for $175 to park his vehicles on that he uses, for his business. Because most times you can't find property in California for $350 or less. But in all other states, please, $350 or less, I can do 100% financing on commercial real estate. For this loan, it ranges from $10,000 to $350. There are no prepayment penalties for any of my loan programs. So you can get it in, after the second or third year when business takes off, you can pay it off with no prepayment penalty, which is huge. The term can be up to 10 years. And I always say take the longest term possible, especially if there's no prepayment penalty, because that keeps your debt to income ratio low, and payment to income low, and things of that nature. people always kind of want to know the documents that we need to apply. If you want to, guys, if this is being recorded, but also if you want to just take a picture, that would be great as well. The personal information doesn't change regardless if you're an existing business or acquisition. That doesn't change. We'll always need the most recent year of tax returns. If you filed an extension for 2023, then we'll accept 2022 tax return until the extension period has been exhausted. Then we also have forms that we have you complete, like the personal financial statement, the personal expense form, most recent pay stub if you have outside income. Guys, please go tell all your friends, family, and everyone and anyone you know. Do not call me after you quit your job. Please, please, please employ and encourage people to call me and all other lenders before they quit their job, especially if you're a startup business, because that's how you show your ability to cover your personal expenses and the minimum payments reporting on your credit report. More than likely, if you have W-2 income and you are looking and you're a startup business and you are living lean and don't have a lot of unsecured debt, and you aren't living you aren't living outside of your means, more than likely you will get approved for a business loan with CDC up to $350,000 as a startup business if you have outside W-2 income. So please, please, please go tell everybody to call me before they quit their job. If they want to start a business, or if they've just started a business and they're like, I'm about to quit. Soon as I can quit, call me first. Call me first, call me first, call me first, call all lenders first. Okay, guys? And then the business information. Miss Linda Gray works for, is an advisor, a mentor with SCORE. SCORE is an organization that will help you with business plans and 24 months or financial projections for free. As a startup business, most times all businesses, startup, existing, and acquisitions, you need a business plan and 24 months of financial projections. This is your roadmap. This is your roadmap for you to bag into that $1 million in net income that you want to make, to plan it out. This is where you do the backwards math to say, okay, if I want to make $100,000 this month, this is how many customers I need to see. This is how many sales I need to have. This is what I need to do. So the business plan and the financial projections is your roadmap that, regardless if you're looking for access to capital or not, you need to have a business plan and a roadmap. Unless things are, regardless, you need to have a business plan and financial projections for your roadmap. So again, the startup business, these are the documents we need. I can also do tenant improvements and help with the lease space. It has to be from a licensed contractor. So we do need an actual bid or proposal from a licensed contractor for any tenant improvements. For an existing business, that's where we need the 2 years of financials, the recent 2 years of business tax returns. That's supposed to say like the 2023 profit and loss statement and balance sheet, and the 2024 interim profit and loss and balance sheet. So regardless if you've made a profit or not, if you have 2 years of tax returns, business tax returns or greater, we want you to share them. And again, if you're a startup business, it's not going to hurt you, nor an existing business. It won't necessarily hurt you if you've taken a loss, because it might be projection based. Now, if that's the only income that you have and that's covering your personal expenses, then of course you need to have sufficient income overall to show us that you can cover the minimum payments and on your credit report and your personal living expenses. Still the same personal items for the individual. An acquisition, still same business and same as a startup business, but then also we need 3 years of financials for the business that you're interested in purchasing, because we're going to do a valuation on that. We're going to make sure that the sales price is actually worth that what they're asking for, the value actually comes back at it based on their profit and loss statement, the different assets they have, things of that nature. And of course, if it doesn't value at what the sales price is, then you need to reconsider purchasing that business or go and have further conversations. A few success stories. Well, one success story. I had I had a startup business that wanted to open a Louisiana famous fried chicken. The gentleman and his wife, they both had credit scores of 624. The gentleman had two open collection items. The spouse had one collection item. The gentleman was able to settle the collection items for less than the full balance and provide me the documentation that the item had been paid off. But again, he could have just simply made a payment arrangement. And I would have been okay with that to move forward. Both of them actually have W-2 income, but guess what? Their income, the two of them together, was only about $78,000. The two of them together, but that was just enough, or more than enough, to cover their personal living expenses, their rent, and the minimum payments reporting on their credit report. So, like Michelle stated earlier, there's no minimum revenue requirements. It's more so about the revenue that you have being able to cover the expenses that you have. So we don't have a certain, okay, well, we need to see 10,000 a month in monthly statements, or you need to have 100,000 in net income to apply with us. None of that applies to CDC Small Business Finance. So they both had W-2 income. They wanted to get the location. He needed it to be built out. He needed the furniture, the equipment, and he needed 6 months of working. Well, he needed working capital, pay his staff and things of that nature. I was able to approve this guy for $350,000 for a Louisiana famous fried chicken. They had a soft opening about a month ago. They had their soft opening. The reason we approved this deal is because they had strong industry experience. They had previously owned a market and a store, but their cash flow, their personal cash flow, was tight. The bank actually denied them because they're a startup business, and the bank is more than likely going to deny a startup business. And on top of that, at the time, it was a 10% injection and 10% post-funding liquidity that was required. At the time, they didn't have enough cash on hand. They had a family member write them a letter stating that they would gift them $55,000. And that held us over me during the pre-qualification, the underwriter approving the loan, and the head of credit approving the underwriter's approval. After the head of credit approved the deal, the funding manager then told them, hey, go ahead and accept the gift from your cousin and deposit the funds. So they accepted the gift, deposited into their business checking account, and we funded them the $350,000. We do fund control. So we're going to disperse the funds to the contractor. We're going to pay for the equipment directly. We're going to pay for the furniture directly. The only cash you can get is working capital. And as a startup business, working capital will give you 6 months, 4 to 6 months of your anticipated monthly operating costs as working capital. For an existing business, you can only get possibly 1 to 2.5 times the amount of your monthly operating costs as working capital. So for a startup business, we get more working capital. For an existing business, you got to kind of show us why you need this working capital. Why do you need the cash? Existing business, I funded an existing business also. They didn't actually why didn't they go to their bank? My rule of thumb is if you have a strong credit score, if you have strong cash flow, if you are an existing business, then you should be talking to your bank about business lending, and they should be willing and eager to work with you. If your bank is not eager to work with you and you're an existing business, again, that goes back to the interview, some of the interview questions from Michelle earlier, then you might need to find another financial institution. But if you have strong credit, strong cash flow, things of that nature, the reason why you would come to me versus your bank is because you don't like the financial institution. They're taking too long. The rate is high. There's no prepayment penalty, things of that nature. But the reason why you get declined by your bank most times is because of cash flow. And like I stated, most times they want $1.25 to every dollar in debt, or to every dollar in debt that you have. My CDC Small Business Finance, we only want $1 in net income for every dollar in debt you have. So it's much easier to qualify. But again, I want us to be relationship focused and driven, and your bank should be taking care of you. It's an honor for them to have your business checking account, regardless if you have $1 or 10 million in that account. You should receive the same treatment, and that's what I made sure to do to my clients when I was in banking. So those are a few of the actual success stories. Existing business, 698 credit score. They had strong cash flow, but we did 50,000 debt consolidation, and I'm sorry, it was 50,000 working capital and 73,000 debt consolidation. I think the debt load was too much for her traditional bank to actually move forward with the deal. And also, guys, keep this in mind. Just because one SBA lender denies you does not mean another SBA lender will deny you. So get comfortable with no, even, and also I do not pull credit until I know it's a viable deal to do so. So some of us lenders, we can review your information because you have to complete a personal financial statement without actually pulling credit initially, as long as you provide us all of the information we actually need. Here's my information, guys. So again, it says South Los Angeles because that's my natural territory I cover, but I can help anyone in any state, in any area. I work off my calendar significantly. So please go on my calendar and feel free to schedule some time with me so I can share more or learn more about your business. You can also share if you don't want during question and answer. You can, we can have more of a personal conversation. But I will be staying on for questions towards the end. Please feel free to get it however personal you want, because sharing is caring. And guess what? Whatever situation you're going through, it might be somebody else on this call that's went through it, or that is going through it, or about to go through it. So, but by all means, feel free to ask me any questions about your specific situation during the Q&A, or schedule an appointment and we can do a deeper dive to anything that you guys want to discuss. Thank you, Michelle, for having me and letting me take up some time to share some tips on how to acquire business lending. So hopefully I didn't just lose everybody, but yes, thank you, guys.
Hey, thank you so much, Imani. That was amazing. Every time I hear you talk, I'm like, oh, I need to talk to her. I need to talk to her. Because, anytime you are going to engage a financial institution, stress level goes up. I don't care if you got good credit, bad credit, any credit, your stress level just goes up. I mean, it just is, it is what it is. So I'm so glad you're here. I'm glad you're going to stay around with us. And then we're going to transition to our SOS colleague here, Daniel. Thanks. We'll bring you right back at the end. And Daniel, how are you?
I am doing great. Great.
Good to see you. I'm so glad you're able to join us. I know we had some technical difficulties early on. My computer crashed, so I was stressing. And as an Air Force veteran, military, we just, that's like challenge. That's like telling us we can't do it.
So that's right. Get it on the plane. Get it on the plane. That's all that matters. Cargo strap is broken. It's okay. Get it on the plane.
Exactly. So, what a delight it is to have you here, CEO of Operating in the Black. I'm glad to see you got black on. You repping your brand well. Let me just say, first of all, I love your passion for relationship. You're always seeking, let me understand more about what that person does so I can help them. And I think that's amazing. You're a giver. I see your generosity in the community, and that's why I'm so honored to have you. Tell us about your Air Force time. Before we get to your presentation about business and personal credit, but what are some of the things, including your military time? One, how did you come in the military? What made you come in the military? And then we'll go from there. Kind of want to understand how you got from there to here.
Sure. When I was 15 years old, my brother, my eldest brother, was a Vietnam vet, and he was a jet mechanic.
Wow.
And I would sit there on the sofa, and I would just look at his certificate of the jet mechanic and said, you know what, I want to go into the Air Force. So from the age of 15, I joined junior ROTC, got into doing all that. It was Army, and then I went to say, okay, I made it to colonel in that. And then I said, okay, finally went down, took my ASVAB, and I said, okay, you can be an electronic technician. I was like,
Wow.
perfect. So I'm gonna fix radios. So they send me to tech school, Biloxi, Mississippi. Had a wonderful time there. And then I
Wow.
get my first duty assignment. They send me overseas to Clark Air Force Base in the
Oh my
Philippines.
God.
And I was
Oh my
like,
God.
okay, that's great. Well, I really wanted to stay stateside, but I'll go overseas. That's not a problem, not a challenge at all. And then, as you think in the Air Force, you're going to be running around in your blue shirt, fixing radios, going up and down the runway, things of that nature. Maybe some 12-hour shifts. That's as hard as
Yeah.
it's going to get. Send me directly to a combat unit.
Oh my
so,
God.
so I was in Det 3 4th Combat Com in the Philippines. Absolutely loved it. It was a great assignment. Came back to the States, got into another combat unit over at Cocoa Beach, Florida, at Patrick Air Force Base,
Yeah.
and traveled the world. Went to Desert Shield, Desert Storm, came back and said, okay, 10 years was enough for me after seeing all that mayhem, and
Yeah, I'm
started
sure.
working for Nokia Mobile Phones as an engineer after I got out of the service. So it was just a wonderful, wonderful time. Wonderful time.
Well, first of all, I had to grin the whole time because Clark Air Force Base, it's now closed, but what a great, I got to go there a couple of times on a couple of exercises when I was stationed in Korea. Absolutely loved, the people, the food.
People.
I mean, we'll have to have a whole separate conversation about the Philippines. But then, how did you get from Combat Com to Nokia into this financial arena? Where did that come from? What inspired or prompted that?
I was in Nokia, and I was just a bench tech. Started out as a bench tech, got promoted to technical marketing service. So I used to travel all around the United States, showing people how to fix telephones, the Nokia mobile phones, rating their cell sites, and all that other good stuff. So my accounts were $100 million when I started, and at the end of it was 700 million. So
Wow.
all these people got all these tremendous raises.
And you
I
did.
got I didn't. I said
You
I'm on
got
the wrong.
you got a little plaque.
I didn't get that. Thank you for your service. Thank you for your time, Daniel. So I said, okay, I'm obviously on the
Mm,
wrong end of this dog. I need to get into sales.
right.
So I started in sales. I worked for a little securities company selling security systems door to door. I was one of those guys. You let me put
Wow.
a sign in your front yard, I'll put a free security system in your house, and the only thing that you have to do is pay for the monitoring. So I did that for
Wow.
a year, and we became so powerful that Brinks bought our whole little shop.
Wow.
So the sales manager took me to another location. We did the same thing, and then another company bought us out. And we did that one more time, and then Entergy bought that company out. I said, you know what? I love this, but
I'm
I,
tired of getting
you
bought
know,
out.
I'm tired of getting bought out. And we're doing the right things. So I
Yeah.
got into doing real estate at that time. So just a multitude of sales jobs. So that all kind of culminated into me selling advertising for a very large agency. A guy that had gotten fired from that company says, Daniel, I'm not doing very well at this company that I'm at, but you would be ideal.
What?
And
Who
what
is
that
this guy? Wait a minute. Wait. Just back up. Who is this guy? Was he a friend?
Actually, no, he wasn't. We
This.
absolutely could not stand one another when I first started selling advertising. We were just head to head the entire time. But after a year of that, I won him over. And he just really enjoyed me. And we just really had an opportunity to talk and just get to know each other. And he had a run in with the actual sales
Unbelievable.
manager, got canned, and didn't see him. Then he just gives me a call out of the blue and says, I've got this opportunity for you. I've got this opportunity. I would love for you to take a look at it. And I said, okay, I'll take a look at it. And I absolutely loved it because it was working with small business owners, giving
Ah,
small business owners loans.
wow.
And it was such a great learning experience. I've loved small business. Small business owners have a very, very dear place in my heart. As you know, you're combat as well, and you saw all those to any soldier packages.
Yeah,
And
yes.
some of them were coming in huge boxes. You know, the folks could not afford to send that. So small business owners were just telling everybody, just bring it over here and we'll get it to where it needs to go. You bring it to us
Yes.
and we'll pack
Yes.
it up. And so I have just such a lot. We knew we were going to kick butt and take names. We just knew that, but we really wanted to know would the American people be behind us? And when we started
Wow.
seeing all that stuff, razors and cookies and things from Girl Scouts, and it was just we just knew, okay,
It
this is
matters. It really
we're going to
does
get
matter.
it. It does matter. It absolutely matters 100%. So my focus and dedication is to always pay back that feeling. If we don't disrespect small business owners here. If you come
Mm,
here with a legitimate need, we will spend the time to help you. You know,
wow.
that is in our DNA. We will
Wow.
not disrespect you. No just means not right now. We don't accept no. So we
Hmm.
will fight for you. You know, so the thing that Iman was talking about, relationship building, that's what we're all about here.
So so what? So you went through the evolution of your career. How did you this opportunity turn into your business?
When you were dealing in the organization I was working with, although it was the number one company in the industry, they had just a limited product selection. As a matter of fact, they only sold
Mm,
one product. So it's
mm.
for business owners who have found themselves in trouble that needed a loan. And those loans range anywhere from 19% all the way up to 67%. So yeah,
Wow.
exactly,
Wow. Wow.
exactly. And but you'll take that loan if your business is getting ready to go out of business. You'll take that loan. Or like one gentleman that came to us, he needed $100,000 loan, and so did the paperwork on it. I just recently started, and the manager did the thing. He says, "Okay, it's 100,000. They pay back 150,000 at the end of the year. It's 12-month loan." And so I took the call, called him up, gave him the numbers, and he goes, "Daniel, that sounds like 50%." I said, "It is." He says, "I'm about ready to cuss you out." And I said, I said, if I were you, I'd cuss me out too. I just recently started, but I was looking at, he said, so Daniel, would you take this loan? I looked up because we were monitored on our phones and they had
Absolutely.
video cameras upstairs. I mean,
Yeah.
honest and everything else. I said, no, I wouldn't take it. It's too expensive. He goes, okay. So he hangs up the phone. He said, I got to think about it. Hangs the phone, calls me later, 3 days later, he says, I'm going to take that loan.
Wow.
He takes the loan for 100,000. He put two crews on the road, bought two trucks, put two crews on the road, went from $100,000 in sales per month to 200,000, from 200 to 320,000. He had
Wow.
1 month of 720,000,
Wow.
and then he leveled out right about 300,000. He calls me back, says, I want to get another one of those high interest loans. And I
What?
said, why? We were been watching you. You did $1.2 million. And he says, well, when I got that loan, all I could think about was working hard and paying it off. Getting,
It
you
was a
know,
motivator.
it was a motivator for him.
Wow.
So those loans have their place. Okay. As a matter of fact, we will only give you two. And traditionally, the only reason why you have to take a loan like that is because you have poor credit.
Got you.
Okay. So, I mean, we have great products here that can get you started for very, very low interest rates, but that it was just one of the reasons why that kind of got me started and doing what we're doing. But,
And now you're
you,
able to create your own products. Is that the case?
that's correct. We have a couple
Wow.
of white label products that belong to us and us alone
Wow.
that we're very, very
Wow.
proud to market.
Wow.
We're really proud of the things that we're able to do here. And everybody knows if you're a woman, if you're, of color, you're going to have some additional hurdles to jump. You know,
Absolutely.
my mom was
Capital.
always saying, don't worry about, you know, the challenges, just get in the game.
Yeah.
So you can't
Yeah.
do anything complaining on the stand. You got to get in the game, son.
True.
So my mom and my dad was always about don't worry about the obstacles. Overcome those obstacles and let them see your talent. And so that's my goal. I do not care what someone has done, someone has told you. If you have a burning desire to be something more than average and ordinary, I want to hear from you. And you're going to
Wow.
have a whole team of people here fighting to see you win. And one of
Wow.
the great things, Michelle, about being able to reach out to you and talk to you is just the tremendous amount of resources that you bring to the table from the
Thank
people
you.
that you know, the patience that you have with. I was telling people I have nowhere to send people because everyone comes to me for government. I get people who have government contracts and they don't have, they don't understand how it all works. I don't understand how it all works. I bought the stuff when I was in the military. I just filled out the paperwork. It showed up. So I had no idea. So to be affiliated with you all and the vast knowledge down to just the just
It
the
is
dust
amazing.
is just amazing. So I'm so thankful and so proud to have the opportunity to come and speak with before your group today, but just
Yes.
even being affiliated with everyone in SOS.
Let me tell you, Sowing Our Seeds, which is SOS founded and started by Lori Smith, retired VA contracting officer and acquisition professional. That's how I met David or Daniel, I'm sorry. And let me tell you, he is not overinflating the capacity and the capability of the assembly of these individuals, just tremendously generous, much like Daniel is with his knowledge and insight. And so, with that, Daniel, I'm going to go ahead and introduce you. Operating in the Black CEO Daniel Winton. He's going to talk to us about empowering our success, mastering personal and business credit. Then at the end, we're going to come back and Imani's going to join us and we're going to have a conversation. Thank you again so much. I'm so excited to learn more and to share all of this with the community.
Thank you so much. I appreciate the introduction, and I'm definitely looking forward to sharing this information. Well, hello, everyone. Thank you all for attending this evening. Of course, you could have been anywhere else, but you decided to spend some time with us. So we're always so appreciative of anyone that takes the time to do that. We're going to be going briefly over personal credit, startup business funding, business credit, and becoming your own bank. Michelle has really asked me to kind of focus on business credit, so we will spend a little bit more time there than in other areas, but we always want to start out with the very thing that most people do not want to be bothered with, which is your personal credit. And personal credit is essential. It is the foundation of everything that you're going to try to accomplish while running your own business. So, payment history is one of the most crucial factors and it reflects everything that you're trying to accomplish. But the challenge is that no one tells us when we come out of high school or when we go to college that all the things that we're doing, how much that stuff is actually hurting our credit. Credit utilization, length of your credit history, credit mix, new credit inquiries, public records. It seems like a lot. But I want to let you know that is the very, very first thing before you start your business. You have to address your credit. And we always tell you, but the number one most important thing or the most identifiable trait of all successful business owners is that they monitor their credit because credit scores are important because they signify your ability to borrow money, the terms of loans that you're going to be offered, the interest rates at which you will be paid. Lending is a sales business. So if you have a late, they may not tell you no, but the whole idea is they can let you know that because you were 30 days late on a Visa credit card 3 years ago, that we're going to charge you an extra 2% on this loan. And you're going to accept that because you know that you were late. So one of the things is that why pay this additional interest rate when you don't have to, when you can actually address that in the very beginning stage, just while you're putting your business together. 300 to 579. That's a very, very low credit score. As you heard from Iman, they will work with credit scores that low as long as you have an indicate of a reason why that happened. You know, you were late. I lost my job. This happened. I neglected to pay it. I just completely forgot. Those are typically a lot of the answers that lenders are going to hear. So one of the things that you want to do is you want to get into some form of credit repair that is going to actually take care of this, or credit restoration. So I'm not going to read through all these. So we know that the highest credit scores are 800 to 850. Lenders really at a minimum want you to be at 670, 680 or higher. But the goal is always to make sure that you're getting all of that taken care of. Again, payment history, your credit utilization, length of credit history, types of credit in use, new credit. Let's go over a few of those things. When you are using your credit cards, you want to make sure that you're using no more than 30% of what's on that card. For instance, if you have $1,000 credit limit, you never want to make that card over $300, because at that point, now you're starting to negatively impact your credit score. So that is the reason you always want to make sure that you're getting higher limit credit cards. So those starter cards that you receive, that you have a $300 use limit on, if you put anything more than $100 on that card, you are going to negatively impact what your credit score is going to be. The length of your credit history also refers to how long you've been using your credit. So those starter credit cards, don't close them off. Don't say, "Oh, I've only got a $300 credit card. I'm going to close that account out." No, because that's probably a card that you've had for a very, very long time, and it is playing a significant role in your credit score. You close that credit card out, you could likely drop your score between 60 to 70 points. So you just keep that card open. You put some gas in your car, 30, 40, $50. You pay that off. You do that once a quarter. Just make sure that you're utilizing those cards, because if you go 1 or 2 years without using that card, the lender is going to take that card back. And in most cases, those $300 credit cards are not even worth asking for a credit increase, because they just really don't have a substantial balance on them. Now, revolving credit is looked at a little bit different from installment credit or open credit or secured credit. The secured credit is for those that you didn't have any credit to start, so you can go ahead and go down to your local bank or some lending institution. You give them $400 or $500 in some kind of secured account. They give you a credit card based on the amount that you have. You borrow it, you pay it back, and then after you've done that for a number of months, then you will get an actual credit card. Again, keep all those tools open. And it's always good to get an Excel spreadsheet, or you can contact a banking, an internet bank like Wave. I think it's wave.apps.co or something like that, that you can actually start tracking all these things. You have to get very, very serious about your credit and how you're tracking it. Because once you get a late on your credit card or any bill that you're late, it's going to stay on there for a minimum of 2 years and a maximum of 7 years. Opening a new account also reduces the average age on your credit. A lender, when you fill out an application, you're going, you'll make it through their little matrix, and there's some kind of AI system that's judging you based upon how much money you make and everything else like that. But when it goes to underwriting, you're going to be dealing with somebody in a shirt and a tie that has a wife or a husband and children, and they have to determine, are you credit worthy enough to actually get this loan? So they're taking a look at your bills. They're looking at all the inquiries that you've had. Maybe we can't see. Maybe Daniel did get this loan over here, but it's not being reported. So we're going to turn him down based upon his new credit that he has received and all these other places that is showing. You go out to get a car, and you let the car dealership run your credit. Sometimes you'll have 21 inquiries. I have a person right here that had over 21 inquiries from someone trying to sell him a car. Always go to your bank and get pre-approved with your bank, so you only have one credit pull. Although that, you know, any pulls within a 7-day period, they typically will look at that as one instance of a credit pull, but that's not always the case. And when you're trying to run a business and you need that $100,000 loan, let me tell you something. If you lose a business, and anyone can tell you that, it's like losing a child. So that's why we are deadly serious here about making sure that you get money. And we're very, very serious about telling you, okay, if you don't have good credit, it does not matter. It does not matter. What matters is that you have the desire to get everything fixed. And please use a professional service to do that. Please don't try to do all of that stuff on your own, because 9 chances out of 10, all you're going to do is confirm the debt that's on your credit report. And in some cases, you are going to confirm it, and you're going to be out of the game for 2 years. But the overall steps to improve credit is obviously paying your bills on time, paying down debt, avoid opening unnecessary credit accounts. When you go to the mall and they're saying, hey, if you fill this out, we're going to give you this free set of pot holders. Well, guess what? Now that's an inquiry. If they actually do give you the credit, now you have new credit. So your credit score is going to drop. And obviously, again, you want to check your credit scores regularly. The next thing that we talk about is startup business funding. Startup business funding is a product that we absolutely believe in, because the most vast majority of people is, well, let's just ask these questions. What is startup business funding? Why should you get it? How and who qualifies? And what can you do with it? Startup business funding, most people, they'll start out with their personal savings, or they'll go out there and they'll try angel investors. And in some cases, they'll go and try crowdfunding or government grants. All of these things are to get money to get your business started. And all of these things we absolutely believe in, but the vast majority of these things are out of your control. So our program, you can get up to $250,000 in lines of credit, 0% interest for 12 to 18 months. You must have a 685 FICO score or greater, no derogatories, meaning no lates on your credit score, no bankruptcies, and you carry a major credit card. We can get you pre-approved in 24 hours. Your funding is completed in 5 business days. No tax returns are needed. You can be in business as little as 1 day, and co-signers are welcome. So with this particular program, everybody says, Daniel, now come on, I was born in the night, but it wasn't last night. Nobody's out there giving out $250,000 at 0% interest. And I said, I absolutely agree. It says, I'm not a fool. I said, and I agree with you 100%. This sounds too good to be true. Absolutely agree with you. It's not too good to be true. It's just too good to be free. So the organization that actually puts all these programs together to get you your lines of credit, they
Did we lose Daniel? Can you all hear him? I don't know if it's just me. There you go. Oh, he'll probably come back in just a few minutes. We've been hearing from Daniel Winton, Air Force veteran and CEO of Operating in the Black, who is all about helping small businesses finding sources of loans and income based on their unique situation. He was explaining not only about how he got started in the business, but also about the importance of your personal credit's impact on. Thanks, Edith, for letting me know. I think we lost him. Thank you all for listening in. But I believe that he'll be back with us in just a little bit. Do you all have any questions for Imani? Imani, are you still there? I know she wasn't planning to come back, so hopefully I know she was in the background. Are you still there, Imani? But if you have any questions, thank you so much. Imani, we lost David for just a minute there. I'm going to add you to the stage. I know you're probably moving around.
It's okay.
Thank you so much. Do you have any questions for Imani or Iman? Please forgive me. Oh, Jesus.
I know it's a
It's been a
tournament
day.
this year.
It
It's a
is.
tournament.
It is. It is. Do you have questions for Iman while we're waiting for David to reconnect and join us? Let me see here. I know we have we have Edith, Felicia, Desiree. Okay, Daniel is back.
Perfect.
Let's see. We need to get your presentation back as well, Daniel. Thank you. We were Imam was about to go in. You didn't come back for a few minutes. He was about to go in.
Yes, you were, Iman. I know how you are. I know how you are, Iman. I love it.
She said, I got it. I got it. Don't worry. I got it. I take it from here.
I do not even know what happened. I haven't lost. I was getting ready to go on my cell phone to use my my web app to get up. So, goodness. How much did we get to? Did you all hear about the startup business funding part?
Yes.
Yes.
Oh, the part that you said, it's people say it's too good to be true.
Okay.
About the startup.
All right.
So if you'll bring your presentation back up, we don't have that yet.
I don't have it here.
It's not on the screen yet.
No, it's not on the screen yet.
Yeah, he was on a roll, wasn't he, Shawana? He was going in. He was going in. I think he may have burnt the system up.
Did I do something?
Yeah, because he was going in. I was loving it though. You can tell you're passionate about, what
I love this program.
Passionate about helping small businesses and business owners get their personal credit. And Felicia said, yeah, it's too good to be true, but it's not free.
Yeah, exactly.
They're quoting you. Those are mic drop moments.
That's right. Someone tells you something is that free stuff is always the most expensive. I still don't see my presentation.
Did you hit present? You have to start over again, put it back.
Oh, okay. Up. I see. Let's see here. Slides.
There we go. And I'm going to add it to the stage, and you can go to the slide. There you go.
Okay.
Yep. I think about right there.
Okay. All right. Yeah. So as I mentioned, it's not too good to be true. It's just too good to be free. So the company that actually puts that up and manages that program, they charge 9.9% interest. You do not pay that up front. You can simply use one of the lines of credit to actually pay that invoice, and that's it. Now that money works just like cash. So for instance, if you need to use it as a down payment for a house, or down payment for anything, or you want to use a portion of it as a credit card, you can do all of that. We'll show you how to manage that program. It's excellent for real estate investors. Now, obviously, we are telling you, please make sure that you're using that money for a actual project, because although it's 0% for 12 to 18 months, eventually you're going to have to pay that back. Now, business credit. We get a lot. Now, this is what Michelle really asked me to kind of spend some time on, is business credit. What is business credit? Business credit is your business's ability to borrow money just like it's a person. So your business credit can actually walk into the bank, open up a bank account, get a loan, and function just like a human being. Now, what is the difference between business credit and business funding? That's what we're going to be answering today. Business credit basically, again, refers to the company's ability to borrow money or obtain goods and service with payment and terms based on its reputation and its credit worthiness rather than on personal credit history. And that is a big deal. And I really want to make sure that people understand that. Business credit and personal credit are basically two sidewalks that are going down the same side of the, which are going on the same side, same direction. The challenge that most people have is that they'll start self-funding their business. And at some point, now the business grows and they have an expanded need for capital. And so they'll grab their personal credit cards. Now, what happens when you use your personal credit cards? Boom. That's right. Your credit score goes down. And then what happens after that? Now you can't borrow any money. Then you go out of business. That's just the cycle. You have to hit one of those, what we call merchant cash advance, for 40 to 60% interest, which almost can put you out of business just on itself alone. So the thing that we ask you to do is, once we get you started in business and we get your credit cleaned, get that totally perfect, no derogatories, get you over a 685 working with a 700. The next thing that we're going to recommend that you do is get some startup business funding. So you have up to $250,000 in working capital. Now, while you have that money, while you're still building your business and things are going well, you take a small portion of that money out and you start building your business credit. This is what you're not going to find on the internet. People tell you, oh, you're going to get your business credit built in 30 days. That's just simply not going to happen. The benefits of business credit: you're separating your personal and business financing. Establishing business credit allows you to keep your personal and business finances separate. And that is so important. You know, as a person that is managing a family, when you have to go into your husband, go into your wife and say, we need another $25,000 to buy inventory. And now guess what? You may not be able to buy that new car. You may not be able to fix things around the house. Your business needs to have the ability to stand on its own. And not to mention, business credit is always going to give you better interest rates, longer term. And the beauty about business credit is the more you use it, the more they give to you, which is exactly the inverse of what happens with personal credit. You use a lot of personal credit, they take your ability to borrow. You use business credit, they start slinging it at you. They'll actually want you to take it. Now, Paydex scoring, and we'll talk about Paydex and how you get your Paydex score, but the highest business score that you can have is 100. Expect their payment to be early. So you're always paying your bills early. Payment is prompt is an 80. And all these little codes here mean something. So what you do not want to do, just like with your personal credit, is pay behind. You want to always make sure you should be about 15 days early. Now, making sure your business is set up credible. When you walk into the bank and you're asking for a loan for yourself, they can see you as a person. They can see your credit score. And I always like to tell people, your credit score is like your resume to the bank. When you walk into the bank, they're looking at your resume and saying, okay, I can loan Daniel this amount of money based on his resume. So when you are building your personal credit, you need to make sure that that is flawless. Just like when you were pursuing your job, you wanted to make sure that you had an excellent resume to represent you properly in front of that hiring manager. And the thing with your business credit, you want to do the same thing, because in the initial stages, the people who are loaning you money, they're going to look at your personal credit first. Now, over 20 points of credibility are necessary for your business to have a strong identity. You need to have a phone number. So, and a real phone number, something that something that a lender can call, and they love 1-800 numbers. You need to have a fax number. Your phone number has to be listed with 411. You need to make sure that you're licensed to do business in the state that you're operating in. Do you have a license to do the business that you're doing? Do you have a business address, or do you have a post office box? Are there any references? You need to have 3 people that you have done business with before you're actually going in and getting major funding. And do you have a website? Can your lender find you? It's amazing to me that how we think about money is that, oh, the bank has millions and millions of dollars. Why is $10,000 such a big deal to loan? Well, you have to put yourself in that banker's position. Again, that person has a family. He has a wife, he has a child, or she has a husband, she has children. And the way they keep that job is by making sure that they're giving out good loans. What type of identification would you need from me to borrow $10,000? And you have to ask yourself that question. I don't know, Daniel. Is he going to pay me back? So these are some of the things that the banks are looking at when they're actually deciding and determining if they're going to actually give you any money that you need. The business name is one of the biggest things that you can do to assist yourself in making sure that you are actually establishing business credit. And I don't remember if I said business credit, the difference between business credit and business funding. I know I briefly touched on it. Business credit is the ability of that business is getting funding on its own. Business funding still is business. You're still getting funding for your business, but they're using your social security number. So anything that you're using that is business funding has a credit, your social security number. Anything that is business credit is using its own EIN. Your EIN is the same same 9 digits that you have for your social security number. It's for your business. But one of the biggest thing is that when you're filling out applications, you have to make sure that you're using the exact same address in every single place, because it will show up, because there's 3 organizations that monitor business credit, and they want to make sure that you're actually in the same location and it's showing exactly the same way. Make sure that you're doing business as an LLC or a corporation. We don't counsel you on that. We have specialists for that will show you the difference between an S corp, a C corp, all the other things. But if you're doing as a business as a sole proprietor, very, very, very difficult to establish business credit. Now, again, on the internet, you're going to see all kinds of things. You're going to see, establish your business credit in 30 days. You can get $250,000 in 15 seconds. It's just not that way. Companies want to see. Your business address, again, I know I put this again on the slide, can't be a PO box, can't be a UPS address, because they'll type that address in that you put on, and if they see a UPS store or something else like that, you're not going to get that loan. You're not going to be approved. You're not even going to get a lot of the setup accounts that you're going to need. Your business also has to have a dedicated business phone and a fax number, and those need to be listed with 411. And we'll certainly assist you in getting all that set up. We do this as a program as well. Take the time to verify with all of these agencies, the state, the IRS, your bank, 411 directories, that your business, I know I've said this 3 times already, in class, but they told you if the teacher says it more than twice, you probably should write that down. Very, 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 very important that your business address is exactly the same every single time, because you will sometimes not even make it through the initial qualifying process if you don't have that. You need to have a professional website. So make sure that you're spending the time that you have that shows your product, what you're doing, that you have your terms and conditions, how they can get a hold of you, how your customers can get a hold of you, phone numbers, fax numbers, email address, all the things that you would expect to see if you were getting ready to do business with someone. And avoid using free services like Yahoo and Hotmail, hotguy@hotmail.com. You are not, you're not going to get a bit. It's just throws you completely out of the game when you're doing crazy stuff like that. And trust me, I see enough of those that come through the house that I have to tell people you're going to have to spend a little money to get some of this stuff corrected. And that's really the other thing, is that when you are developing business credit, you are spending money on your 30-day accounts. Let me see if I have any of those up here. Uline and Quill are some of the starter accounts. Those are vendor accounts that will give everyone the opportunity. Basically, as long as you have a business checking account, they will extend you credit somewhere in the neighborhood of $100. and they do net 10, net 15. And net 10, net 15 means once you receive the invoice, you typically have 10 days to pay the bill. So it's not due automatically, so they give you 10 days to pay that. Once you do this and you have a series of approximately 20 companies that are reporting onto your business account, then at that point, you are in line to be able to go into your bank to actually say, okay, now we have an organization here that's recognized by LexisNexis, that's recognized by Dun and Bradstreet, that's recognized by Experience Smart Business, that's recognized by the Small Business Financial Exchange, Check Systems, Equifax. Again, these are the things that we do. We provide this as a service. Building business credit is not easy, but it is absolutely essential that at some point in time that you do this, because this is always the thing that next to poor personal credit, the next thing that really impacts your ability to grow is your business credit. And the last thing that I want to talk about is becoming your own bank. This is really the 4 tiers of actually owning a business and making sure that you are going to be there for the long term. Again, good personal credit, startup business funding, so you're not actually funding the business out of your own pocket, or that it's not the only thing that you're funding with. Building your business credit, which makes sure that you're no longer using anything from your personal life to fund your business. And the last thing is having your money working at 3 places at one time. Now, I am not a financial advisor. I'm not. This is a product that we market, and basically, it's cash value life insurance, where your money is working for you in 3 different ways, where you can borrow 90% of the money out for any reason to do whatever you want. And the beauty of this particular program is that you can borrow the money out, whatever. If they're paying you 12% interest, they continue to pay that, even if you haven't. For instance, if you borrow out $100,000 and they're paying you 12% interest, and you borrow 90,000 of that 100,000, they're still paying you on that 100,000 12%. So again, this is not a product that we sell here, but this is just one of these products that as you grow and you mature in your business, is that you should have this as a quiver. So that's basically all I had today. I know we've run for a little while. Again, I'm Daniel with Operating in the Black. There's my little UPC code, or whatever code that is, where you can find us. But we're on the web at www.operatingintheblack.com. You can find us on Facebook and Instagram. So Michelle, that's all I have. I think you're still on mute.
Let me add Imani, the 3 of us back on stage. Let's see how, let's see here. I think I am so excited about the information you all shared. Just some tremendous opportunities for small businesses to consider, right? And one of the things I do want to put up here is, it's important for individuals to seek advice from qualified professionals. You both are qualified professionals, but there are various perspectives. Everybody's going to have their own little, take on the industry. So we want to make sure that, people not only reach out to you, but also consider the information for their specific situation, because Correct. We all know, and that's kind of the issue I have with YouTube and some of the things that are out on the internet, is it's just this, spray and pray that it's like this applies to everybody, and you pray that it works, and it really doesn't. It's really about finding the right product, the right program for you. So
you're absolutely right.
Let me see if we got some questions here. Impactful and informative. This was right on time. As far as Felicia also said, thank you so much. If you all have a question, please go ahead and put that in the chat. I will bring it up. But I got some questions. So if you are let's say a small business starting out with decent credit, based on the criteria you both shared, what are the options they should consider? And this is for a service business, not it's not a food business. It's not a brick and mortar business. It is a, let's even say a government contract or consulting kind of business. What advice would you give someone, and what would they be spending money on anyway? I mean, it's a service business. It's themselves. They're going to be sharing their intellectual property. Could each of you maybe give your thoughts on some approaches or things they should think of?
Go ahead, Iman.
Iman?
No problem. So if you are starting out something along the lines of service, what are some things to consider? Yeah, that's the question,
Yes.
Michelle?
Yes, ma'am. Yes, ma'am. Mm-hmm.
So, based on the industry, of course, because service is a wide field, but for starters, you need to ensure that you have, Daniel mentioned about sole prop versus, corporation and things of that nature. All businesses, different entities, of course, you can have better protection with different entities, but a sole prop, you're a business just like the corporation, so regardless of if your entity, you want to make sure that you do your formation documents. Are we past that point, or should I just keep on going?
No.
Okay.
They're past that point. And the reason I'm using this example is because a lot of people who are transitioning out of the military or out of corporate decide, now I want to be a consultant or a coach and share my intellectual capital and expertise and have people pay for that service. But sometimes you need some money to get started. And I was just wondering, I was just posing that as, what would that, it's like, well, I know I need money, but I don't really know I need money to cover, let's say hiring a assistant or whatever. I don't know, but I'm just guessing.
So with that being said, starting out, like you said, and transitioning in a service capacity on top of that, what do you need money for?
Yes.
That's what you need to sit down and figure out for starters.
Yes.
What do you need money for? So are you truly at the point where you need to hire? That's what you also have to figure out as well, because you don't want to hire too soon. Do you have the time, capacity, bandwidth to do all of these items that you will be hiring this assistant for and paying this payroll, which is creating an additional expense, or can you rock it out or thug it out yourself initially? You understand what I'm saying?
Yes,
so we want to keep all operating expense and costs down as much as possible starting off. I don't necessarily suggest going to hire right away unless hiring this employee is going to yield this amount in net income.
Good point.
So if you're just hiring just to have them sitting there, just to do paperwork that you can kind of better manage time or kind of schedule, set up your day as to where you can handle it or facilitate it, then by all means, I suggest initially don't pick up any additional costs that's not necessary or any additional expenses that's not necessary. So starting off, do you provide a service that will evaluate non-existent small business? Gotcha. So
don't take that.
I didn't know if it had relevance to the service business. So initially, like I stated, you have to sit down and going back to that business plan and the financial projections.
Right. Yeah, that's
going back to
that business.
Going back to the business plan and financial projections. The plan will let you know what you need money for.
Gotcha.
Because again, when I talk to business owners just starting off, it's like, oh, okay, well, I need capital, or it's time to scale or expand, and I'm listening, but I haven't heard a legitimate use of funds throughout the entire conversation. So the thing is with my company specifically, and just a rule of thumb, the loan is not for you to live on.
Good point. I'm put that in chat.
Yeah.
That's a good word right there. The
The
loan.
loan is not for you to live off of. The loan within the first 12 months as a startup business for us, we don't want to see that you're taking a salary for the first 12 months in your projections. So, and a lot of service professionals or service providers, I get requests quite often where I can tell the request is mixing up, is basically for you to support your personal, for you to support your mortgage, your rent, your car note, your bills. This is not, that's not what the loan is for. The loan is for your business. So that's
Right.
why we focus so much, and that's why we stress so much on the post-funding liquidity, or how much money do you have after the loan is done, because we want to make your personal living expenses and minimum payments not have anything to do with this business being successful.
Yes, yes.
So you're getting the business loan so the business can pay back the loan.
Got
Right.
you.
Do you see what I'm saying? So that
Yes.
business borrowing the money, your business revenue is expected to pay back the loan, not your personal money.
Right.
So as a startup business, I say the first thing first is you need to truly consider what you need money for. What you need money for. After you figure out what you need money for, then you go from there to figure out if this needs to be borrowed money, or this is money I need to bootstrap, or whatever it may be, or if I just need to do what I have to do what I want to do, you know, and keep my 9 to 5 so I can do what I want to do and be able to support my startup business. So I would suggest you not start a startup business unless you have the funds to start a startup business.
Good word.
So how we work that here is in that in between times when you're working on getting your business up and running. The number one thing that we tell people is do not spend $25,000, $35,000, $105,000 on marketing, because that's what everybody wants to get a loan for. First thing that they walk through the door is, I need a loan for marketing. You're going to go straight out of business. Okay. So the time when you're starting your business is the time to get your credit perfect. That is the absolute. It doesn't matter if you get a government contract, because they're going to look at your credit score. It doesn't matter if you go, because all my customers now that I've met Iman will be going to her. She's she's one of my in providers now, because now this is where we disagree. I tell people, get as much money as you can. Have it on deck. Okay. You don't
that's
have
a line.
to
That's
use
the purpose of a line of credit, though, not a loan.
Well,
you get a line of credit
loan,
to have
I don't
on
care
deck.
if somebody gave you $1 billion, take it. Okay.
Guys, let's
you will
be cautious.
figure out
Where the guests expressed are not the opinion of their own. Let's make sure we read that note that's running through the bottom.
You can see there's a difference.
You'll figure it out, because that's where 90% of the vast majority of people go out of business, not because of intelligence or hard work or anything else. They go out of business because of lack of money. That's it. Okay.
Yes. And so
the former president,
where did you get your before I want to disagree or take one side or another, I want us to kind of peel that back a little bit. Why, Daniel, do you say get as much money as you can? What's the basis of that approach?
Because the only reason that you're not making money is that you haven't figured out who your customer is. Okay.
True.
You have not figured out who that customer is. There are ebbs and flows. I used to own a pizza parlor when I was in the service. We opened up April 1st. We opened up and we did like very little bit of money. And then towards the end of it, to make this story short, by July 4th, we were doing $2,000 a week. $2,000 a week was great money for a little pizza parlor. Next week after July 4th, we were doing $100 a week. And it stayed that way until September 21st. Went out of business. Okay.
Wow.
Went to work for our major pizza chain. Spent $10 million on advertising. We would have on July 4th, we have our biggest week. I worked that place for 4 years. Every single pizzeria after July 4th, their revenue goes down to about 10% of what it was
Wow.
during that period of time. And it stays that way until September. So
Wow.
it's
When school
seasonal.
comes back. Uh-huh.
Right. So, but they knew that. When you're in college, you get a bachelor's degree after 4 years. After 4 years in business, that's why they say if you've been in business for 5, because most businesses don't last for 5 years. After that 4th or 5th year, you know who your customers are.
Yeah.
You know how much money it's going to take to get to that customer. And you know what that customer is expecting when they get there. So that's why length of business allows you, that's why actually funding or funds allows you to hit those ups and downs, those peaks and valleys, to really have a good, that avatar, that customer. You need to know what it's 9 o'clock at night. What's that customer doing right now? After 15 years in business, you know what your customer eats. You know what clothes they're wearing. You know what
Yes.
car they're driving. You know all that
Yes.
other stuff. So the whole goal is to stay in business long enough for you to understand that and capitalize on that.
And
So
you're thinking having those funds, which, could just be sitting there, I guess, gaining interest, right? But you still have to pay on it,
you
even
still
if
have to pay on
you
it,
don't use it, right?
just like when
So
you
I
went to
think,
college.
yeah.
You spent $50,000 a year for 4 years. You didn't make a dime during that period of time. But when you came out, you had a skill, or you
Hmm.
had a plebe, something.
Right,
But you
right, right.
understood that now you're qualified to understand that. And the same thing with your business. So the whole goal is to make sure that you get to understand who your customer is. That is the
I agree.
absolute goal.
And I
That's it.
think
That's
that's a
that's our
challenge.
philosophy here.
No, and I think it's a challenge. Identifying your client and your market is a extra challenge in government, because people think I do this well, and I read somewhere that the government spends a lot of money on that, and so they're going to want me. No, no, they're not. They're
Right.
not going to want you unless they know you. Now, if you're selling products, that might be something they go and they order and it's boom, bada bang, right? But your pricing still has to be competitive, and you still have to sell a lot to make money. That's
Right.
that's the reality if that's your, products are your thing. But when it comes to services, butts and seats, intellectual property, training, consulting, IT services, it's about relationship. It's about not only you being capable, but it's about relationship. And your point about understanding the customer, the government customer generally stays the same until some law tells them to do it differently, right? Or until some person comes along and decides they want to do it within the law differently. And that means it's not your company, it's something else. So
Right.
Iman, did Iman leave? We lost her. Next, we got a question. Do you provide a service that would evaluate existing small business for bankability purposes?
We do not do that. Again, that would be more what Amon does, but we also have in our group someone that really, really does that well, as far as bankability and everything else like that. Again, our goal are really for small organizations. When you're, just like I said, when you're first getting started, making sure that you're not spending funds unnecessarily, and making sure that you're getting your credit right, getting some funding to get you started, and getting your business credit. And then at that
Mhm.
point, because a lot of the things that you're talking about on that, Anthony, really require a lot of specialized help, or we recommend that you get some kind of specialized help, and that you grow. So we're really, like I said, we know what our niche is.
Mhm.
Once you get to a certain level, I'm not going to be able to talk to you. It's just going to be outside of my wheelhouse, honestly.
And you know where it's like on the Hitch movie. You live right here, right?
Yeah, I don't go
Where.
outside of that.
That's smart.
Somebody
That's
tells
smart.
me that they need, $32 million in funding for this. I have people that I can send you to, but it's not my wheelhouse. And if
Hmm.
you are not functioning in what you do well, you're just completely ineffective. And that's one of the things that business owners in general have to be concerned about, is knowing what you do. What is it that you do better than everybody else? This is a truth-based business here. I am going to
Yes.
tell you the truth. It may not be pretty, but this is where it is. They're shooting at us, okay? But
Yeah.
we know
Yeah.
what we got to do. We're going to
Yeah.
have to eliminate that threat. And once we get there, we got to go over here. We
Yes.
don't get the chance to run away. We have to take care of what we need to take care of to win.
True.
Michelle, allow
Yes.
me to answer that question if you don't mind.
Yeah, absolutely.
Okay.
Oh, yeah.
So there are several different loans, guys. There's loans, there's lines of credits, there's MCA loans, there's factoring, and all of these should be used at the time that you need them. And again, it's
And
different
explain
opinions.
what those times are.
Sure.
Mhm.
And it's different opinions again, and practices. I come from traditional banking. I come from being a banker, issuing all these products and explaining them and things of that nature. So the business loan is a term loan. It has a start and an end date. Just like when you get that, you're going to be paying on it after 30 days or after 45 days.
Mhm.
As Chanel mentioned in the chat, and other people, we have to have a plan in place for the money. And for government-backed funds, you can't just simply get what you want. You can only get what you need. So that's why I go based on what do you need. That's why I stated when you asked me what would you recommend a startup business? You don't want to bite off more than you can ever chew also. So as you mentioned, Michelle, you have this money and it might just be sitting there, and you're using the money that's just sitting there to pay back the same money that you borrowed. So at that point, you're not, I don't know if you're doing yourself a service, by just borrowing money to pay back the money that you borrowed, when you're not making any revenue to cover it. A line of credit is best for emergency purposes or for one-off situations, emergency purposes, to use, reuse, use, pay back, things of that nature with the line of credit. That's what a line of credit is for. A line of credit is just to sit there for whenever you want to go pull from it. You can't just do that with a loan. With a loan, like Daniel said, you get 10 million, you get approved for 10 million, you take the whole 10 million and sit it in your account.
Take it.
But again, what does your business need the 10 million for?
You'll find out. You'll find a use for it. You'll find a use for it.
No. I think it depends on your.
Yeah, it just depends.
It has to be. It has to.
Comfort for risk, right?
Exactly. You want to minimize.
I would. Yeah, you want to. But I understand. Yeah.
Yeah, you want to minimize your risk. You want to minimize your exposure. You want to minimize your liabilities. You want to minimize unnecessary expenses. Yeah. So, and then on top of that, if we do get approved for 10 million and you're not making any money month over month because you don't know your customers yet, as you mentioned, Daniel, then what are we doing?
Customers. You gotta know them.
So the business plan, the financial practice, prudent practices, as Chanel mentioned, must be responsible with it and have a strategy and plan in place and work it. Miss Felicia stated also. So I suggest people to recommend you not going out of business.
Yeah.
Regardless if we get to that point after you've made all the prudent practices and the best practices and taken, consulted with professionals to guide you on the best steps and things of that nature. And then I suggest you not go out of business, whether that's hard money loans at the end after you've tried everything else or whatever it may be, but you get a loan for what you need it for, not because you just
and it's a strategy and a tool to be used at the appropriate time for the appropriate purpose. So I
absolutely
get that.
Just like the MCA when the MCA that Daniel you said, when is the different times to use different products. Line of credit is if you want emergency reserves or if you just want access to capital, if you have huge inventory turns things of that nature,
Mhm.
but you need to pay this money back and use it again, just
Right.
like a larger credit card. A
Right.
loan has a maturity date, a start and an end point. It's a specific use and purpose for the loan. The MCA, if you accept credit and debit card payments, you can borrow, you can get an advance on your receivables. A MCA is not
Gotcha.
a loan. A
Right.
MCA is not a loan. It's an advance on your future receivables that you pay back a percentage of your daily sales.
Gotcha. So that's a
So
sales model type
exactly. That's
approach.
if
Yeah.
you're high in debit and credit card
Mhm.
activity, things of that
Mhm.
nature, and you get
Mhm.
revenue every single day. But
Yeah, it's
imagine that
kind of
earning revenue daily and you still have to pay back this money.
yeah.
So prudent
So can we
practices. Mhm.
I was just going to say I think we've kind of talked about the two perspectives
Yeah.
on the whether it's like Daniel says take the $1 billion and you're like no,
You'll figure it out.
you want $1 billion, you billion
You'll figure
dollar
it out.
line of
You'll figure it
credit. I
out.
get it, but what other questions or what other nuggets would you tell a small business owner? And I deal with a lot of they're either startup or they're over a million. They're in the multi-millions. The
Mhm.
people in the middle are less that I have engagement and have.
Yep.
Right.
What's surprising to me is even the ones that are in the multi-millions need money to grow to the next level. And
Absolutely.
Daniel, they're still trying to figure out their customers, even though they're at the
Absolutely.
multi-million-dollar level. Because and a lot of that has to do with, like in government contracting, they may have had a 10-year contract.
Right.
They made that relationship, but now that 10-year contract is running out. And
Okay.
they've just gotten the money in their account. Yep, kept the customer happy, but the customer has changed in 10 years. The
Right.
customer's requirements have changed in 10 years. And
Right.
now they're like, oh my God, this contract's about to end. And this is a major part of my business. What am I going to do? So I'm just saying that the same struggle at the startup is
Yeah,
the same struggle
for sure.
at the growth stage. It's
Right.
Yeah.
just a different struggle. It's the amount of money and the amount of risk, and the amount of opportunity is different. So,
Absolutely.
I think sometimes small businesses believe that when they get to over a million or wherever they want to be, everything's going to be fine.
Yeah.
No,
That's tough.
it's
Like I used to work for when I say I was work for Nokia. We had a salesperson that came in. The company was actually Technophone when we first started. And once a salesperson went in and he had sold a $220 million contract.
wow.
Well, Technophone they could not fulfill that contract. So that's how Nokia came in and bought them because they actually was so successful, it almost put them out of business, which I
Wow.
guess it actually did.
Wow.
So that's why no matter what, and then this is just a lot of stuff that I've seen as far as market and everything else, and I definitely respect Damon and everyone else because I know everybody in government is very conservative, but over here in the commercial,
Well,
over here,
please don't tell them that. I'm glad to hear, even though I think different business models require different kinds of risk, right? And commercial
Absolutely.
is a little different. What I am glad that you said, Daniel, is for them not to spend all this money on marketing.
oh God,
Right? So all these people, in my opinion, and I might get some arrows and
right,
shots at me, that are out here saying I can help you grow your business are masking themselves as nothing more than marketing and branding. They are not actually have receipts. I have issues. I tell people, look at the receipts of these people that you're spending money with.
well,
When
a
I
good
say
marketing
receipts,
agency, a good marketing agency really cannot prove how effective they are
well, then why am I
because
spending money with them? And
Right.
that's the whole point.
because
My point is, Daniel, and I want to have this conversation, is the marketing is okay to spend, but I'm dealing with a marketing company that understands government contract marketing.
Right.
That is,
right,
it understands a government contractor who's in HR marketing. not a generic commercial applied marketing. And there's what, $25,000, $30,000 to do a website and pictures and blah, blah, blah. But they've never done any, they don't even know the customer you're talking to, that you're trying to engage with, right?
Well, marketing is presence. Okay. It's just like when you go to an air show, you're going to see a Rolls Royce.
Yep.
Now, why is a Rolls Royce at an air show? Because the people that buy Rolls Royces buy airplanes. That's marketing. Okay. It's presence. Why do they put Coca-Cola in a movie? And they show you Coca-Cola because it's presence. Gets you in your mind that if you want to be exciting like all this other stuff, presence. So marketing is just about making sure that they're putting you in front of the clients that you should be in front of. So it's very, very difficult for them to prove their story. I mean, they can, but it's just difficult. So that's why it's better to buy leads, or I don't buy leads, but advertising is much better than that kind of stuff like that. But I just tell people, really, you need to struggle.
What percentage would you say, Daniel, based on that? So let's say they can't, the ROI is tough to say. So you take out a loan, you go and you spend $40,000 on marketing. What percentage of revenue should the company be at if they're spending that kind of money on marketing?
I don't really have any good numbers. Because marketing is really after you have defined who your customer is. Okay. Once you understand who your customer is, then you want to effectively get in front of them as many times as you possibly can. Just like they have those little tracking things that you have on your computer. You see, okay, I wanted this shirt, and then all of a sudden you see that shirt like 15 times. No matter time, you go to MSN, you go to Yahoo, you go whatever. All those things come up. All those things, it comes up every single time. That whole cycle is some marketing campaign that said this person has showed an interest in this shirt. So every time they go on the internet, everywhere they go, they're going to see this shirt again. Okay. So it's very difficult. Advertising is something different because it directly leads to your customer. You know exactly if you spent $100 on advertising, if it brought you $1,000 in revenue, you have a good ad. If you spend $100 on an ad and it brings you $2, that's not a good ad. So you have to do something different. But marketing gives you presence. It makes you where you look right. So you don't have. The best thing about marketing is it prevents the no. Because if you look right, that's 90% of the battle. Do you look right? Is this person saying all the right things? So that's why they spend all this money. Tell you, oh, you got to do all this with the average. But you shouldn't be spending. Go ahead.
I think ultimately, Michelle, you wanted to know, so what's a fair percentage to spend on marketing?
Just because I know there's a lot of people out there dangling that carrot in front of these businesses who don't know. So I'm just trying to educate the business.
As a loan officer, if you're, let's just say you are talking to me and you do $1 million in revenue, or let's just say let's say you're a startup and you come to me and tell me that you want to spend $50,000 on marketing. As a loan officer, my first thought is you're not spending that all on marketing.
Yeah. At least not with me giving you the money.
Not with us giving you the money. You're not about to spend $50,000 on marketing. So the marketing thing for me is always kind of like a way for clients to get more, for them to think they're going to get more money with the loan. So the realistic amount of the marketing, as Anthony just said, I think that's very fair, 3 to 10% at most. But again, we want to see, based on your projections, you say you're going to spend this on marketing. How much is this going to produce? How many clients are you going to get from this marketing campaign? How much revenue do you expect to yield? So That's totally that's with the marketing, that when they come in with these huge numbers, we immediately try to knock that down, because at the end of the day, what type of marketing agency are you working with to begin with?
Really,
Like you
really.
stated, Michelle, you have an Instagram page that you go and create websites. You've done one website. Now you're saying you do this for government contracting, or this is what you do on a regular basis. No, it's not. So,
No, it's not.
and
No, it's
and you
not.
want to charge 30,000 for it. So
That's where I'm talking about. And the government marketing is government contracting marketing. Marketing to the government is totally different
yeah,
than marketing to a commercial entity. And most of the people I'm talking to have paid these astronomical prices, have gone to marketing companies who do not understand the government market and don't currently have government contractors as clients, right?
Yeah.
And so that's where, when we're talking about that kind of money, I tell them, don't tell me. I just look. I don't want to.
Exactly.
Because it's criminal. It's criminal. It's criminal.
Yeah. So going back to use of funds. Use of funds is extremely important.
Exactly.
And what do you need the money for? And where's the invoice to support this $50 marketing cost that you say you have?
Yes. Yes.
Yeah, that's,
so now, let me see.
And what are you gonna get for this 50,000? But I know we're on Linden, not marketing. So
yeah. So that's why I said we need to do I'm gonna bring some folks back where we're gonna talk about government marketing, because it is totally different. It is not ads. They're not looking at ads. They're not looking at that. They're looking at your website. They're looking at who you are when you engage them in person or on virtual. It is totally, just totally different.
Right. That's what I tell people. I know absolutely nothing about the government. I mean, it's just because I know it's a whole different talking game. It's completely different. It's completely different.
It is. So look, we are at 8:40. I think we're about 10 minutes over, because I know we started late, so we're gonna end late. But here's what I do want to do. I want to ask any last questions, y'all. Y'all out there in the audience, thank you so much, Felicia, Shawana, Anthony, Chanel, Miss Traore. I never get her first name right. Felicia, and others. And what's amazing is I have to have LinkedIn over here, because I don't see all the comments on this platform to put them on the stage. But if you have a last question, please put it in the chat, and I'll put it on the screen for our amazing Iman and Daniel to answer. But before we go, I want y'all to tell people where they can find you, and who your ideal client is, and what you can do for them when they reach out.
For sure. Should I go first, Daniel?
Yes,
absolutely.
Yeah, ladies first. Come on, Lady Iman. Come on.
So
she knows I'm scared of her.
No, sometimes he wants to go first, sometimes he doesn't. So I have to gauge.
Girl,
let him.
Stop.
We love each other, guys.
They truly do.
We do, seriously, and we work together all the time. And talking to Daniel, you're going to end up talking to me anyway. So.
Absolutely, every single time.
So
unless you have a restaurant, right? Is a restaurant?
No restaurants for now, but it's coming back. But no need to even mention it. I'm Iman Cotton. I'm a loan officer with CDC Small Business Finance. I wish I was connected to YouTube so I can type my Calendly link in the chat.
You can. This is.
I'm not. I'm only through LinkedIn, so it doesn't let me. You have to connect through YouTube to type in a chat. But if you could type it for me, it's calendly.com / or Shawana /
Shawana, can you do that, please?
So my calendar link is Calendly, CALEN, right? CALENDLEY.com Iman Cotton. So it's like calendly.com / Iman Cotton. But nevertheless, you can also text me at 310-613-3791, and I can share with you my calendar link as well. I take all clients, anybody and everybody can actually call me. That was a private chat, Daniel. Anybody and everybody can call me for a checkup, to have a conversation. If you're just starting a business, if you haven't started one, if you have an existing business. So I can meet everybody exactly where they are today. The one thing that I want to, at least if you didn't get anything from this session, I want to let you know it's possible, to encourage and to spread just encouragement that, again, lending is actually possible, regardless of what stage that you're actually at. And also, Miss, 1 second, I'm sorry.
Wait, Calendly, while you do calendly.com and then Iman
/Iman Cotton. Yep. Okay. And Miss Felicia, don't you wait to have a conversation. Because as Daniel mentioned also, by the time you need something, or by the time you get ready for lending or need to apply or want to apply, it might be too late. And you might not need anything else, Miss Felicia, to apply today and get approved for $350,000.
Yeah.
So if nothing else, I just want to leave you guys with some encouragement, that there are lenders out here that can meet you where you're at. You have several options between me and Daniel and a slew of other people. Thank you, Shawana.
And thank you so much. Thank you, Shawana. And thank you, Iman. Daniel.
Thank you, Michelle, for having me.
No.
Okay.
Absolutely.
Well, basically I have two avatars. Primary avatar is brand new customer, 700 FICO score, and looking to basically get into business. That is our primary avatar. And then the second avatar is those that have a 500 FICO score, that are doing $10,000 in business and have been in business for at least 2 years. Those are our two primary clients. So if you fall in between those two ranges, I know Iman and I went back and forth tonight regarding prudent practices and different things of that nature. And certainly all of that it does matter. It absolutely does matter. We are, I guess, a little bit more commercial. So whatever your focus, whether you're conservative or whether you are, however you want to do it, we do. But the bottom line is that that you have to make sure that your basic requirements for your credit is taken care of. And that's where we spend a lot of time, is making sure so that when we hand you off to anyone, that we know that you're in good hands. Because if your credit score is good, you can pretty much, you literally can go anywhere at that point. So that's our goal. And that's it.
Thank you so much, Daniel. Thank you so much, Iman. This is Michelle Gardner-Ince, aka GI. It's been my absolute pleasure to spend time with these amazing humans. I had some, again, technical difficulties with my video, so you all are going to have to just enjoy my picture as we sign off. But be here tomorrow, same place, same time, 6 to 8 p.m. We have Guy Timberlake, the go-to guy, success in government contracting. He is amazing. He is going to be talking to us about ethical stocking. So that's why I was saying there's a very specific approach to marketing and building relationships with government contracting, in the government contracting arena. He does a boot camp on that, so I don't think he's talking about that tomorrow, but you'll get a little taste of him. So Daniel, please join in, because I think the minute you understand this arena, it's gonna blow up for you. It's gonna blow up for you. So join in all this week and 6 to 8 p.m. Eastern Standard Time. Everybody, the replays. What's unique about this is you can go back and watch the replays, and if you think it has been amazing and informative. Please share it on your profile. Please share it to someone directly, their messaging. And Daniel and Imani, I'm gonna have to do a clip of that little debate and put it back on.
That's it. That's it.
Yeah. Thank you all. God bless. And y'all have been tremendously generous. I'm forever grateful for you joining and sharing and empowering the community with your financial solutions. Good night.
Love you
Thank
both.
you so much,
Love you
Michelle. See
both.
you, Daniel.
Thank you.
Bye.
Okay.